All right, let's talk about Affirm real quick. That's ticker symbol AFRM for those who aren't aware. And for those who aren't aware of what the name is, it's a pay as you go kind of deal, kind of like the Afterpay, Klarna, some of those other ones. In my opinion, personally, I like Affirm the best. I've tried some of these fintech pay as you go kind of things, several different ones. I've tried them with car parts and just just goofing around purchases on the weekends and stuff, and really ended up liking Affirm. I like the platform a lot. I like that they don't report to your credit, and that even though they might charge you somewhat higher interest if you extend it, once again, it's still not on your credit. So you got your credit looking good, and then you've got a firm that you continue to build up a new line of credit with. And as they continue to be accepted at more and more places, I mean, you can use them for just about anything these days. It's crazy. I've seen people use different apps with a firm, or different programs they have, and take vacations, do VRBO, get car work done, pay for trips, buy just about anything you want on, Amazon, Google, whatever. And I can't believe the amount of aftermarket companies that are jumping in with the firm. Everything from, hunting and camping apparel to custom car companies. You've got, custom Mercedes dealers and BMW tuners that are accepting a firm. It's pretty crazy. So, anyways, that's my quick take on how I feel about it. I like it. I think it's got a good narrative. I think it's got a good life cycle ahead of it. I think that there's big things to come. I remember buying a firm last year and thinking that even at $48 was a great deal, and people were saying they didn't believe in it. Other people I knew weren't too big on it. I was buying call options for later into the year for $60 and $90 a piece. People thought I was crazy for even thinking we could do much with a $60 call option aside from just gambling. And firm turned around and ran up to like 170 or $180 or something like that. So I mean, blew way past my own expectations. I wish I had actually held more of it and been a bigger investor, and even had some crazier call options for, like, obviously 100, 120, 180, 220, 240. I mean, when no one even thought that thing could hit $60, those call options would have been pennies. You literally probably would have been paying 1 to 3, maybe 4 cents a piece. And then later on, they became worth, several dollars a piece. I mean, you're not going to get those type of gains in very many places other than highly risky crypto coins, also on leverage or something like that. So for a legitimate stock with a good team behind it, good management, good forward looking progress and whatnot, and just I think that it's a huge I think it's a huge void that they can fill. And I think that they can also continue to adapt and move into new fields. I don't think that they're just locked into as small of a zone as people think. And they've continued to show people that. So once again, I think there's a lot of good things about a firm. And even if you're just looking for a short-term trade or something that might have a better narrative coming out of this downtrend, and even if you're afraid we're gonna hit into a recession, is kind of chop sideways for a while, and you're looking for things that could get individual narratives. I really personally think that Wall Street, even if a firm doesn't turn out to just have a legitimate reason to cost 40, 50, $60 a share, I think that even just the narrative of the holidays, I think that Wall Street could come through. Next thing you know, you're seeing the popular forums and news outlets talking about what a firm can do, and how even if we're in a recession, a depression, that or they're talking about depression, we're in recession, whatever you want to call it, as they start saying things and making it worse coming into this holiday season, that could be part of a firm's narrative. They could literally come out and say something along the lines of, while consumers have, no credit, gas is high, they're pressed for money at the pump, most can barely afford a good turkey or a Christmas tree, boom, there's Affirm letting people go Christmas shopping, letting people do holiday shopping, allowing people to, do certain programs where they can even go shopping for regular food, things of that nature, getting their cars fixed so they can go to work, getting gas when they can't afford gas. I mean, Affirm has, in my opinion, a huge narrative coming for even the bad problems with this market. Then, if you believe that this is all going to turn around and then you go forward, well, it's been treated as a risk asset. It's, treated in the tech, fintech stock kind of way, and it's been beaten to death. So you get a risk on narrative, and it's going to work for Affirm too. But even with a lot of risk on assets not working and not turning out properly, what you're going to get is possibly you could have a market of 90% of the good stuff crashed, and a firm could be one with its own individual narrative because of the fact that they're going to work with people even when times are bad. And on the flip side of that, that could be a great narrative coming towards the end of the holidays and moving into next year for the bears looking for things to go crazy and short after they run up, because then the next narrative can end up being, as the economy gets worse and then they start maybe throwing around the word recession more consistently, which then gets followed by people forward looking saying depression. Then next thing you know, there can be a whole nother narrative where they talk about how when people quit making payments on things, that a firm's just gonna, go to zero. That a firm has so much debt out there, so much credit with risky creditors and people that couldn't get regular credit cards or couldn't get normal regular credit, or supposedly the only people using it, and that it's really a C level or worst type of credit system, and the customers they have are just the type of people that don't really have credit anyways, and they're not going to make their payments, and then turn around and run it right back down. Me personally, over the long haul, I see Affirm as a winner. I think it's going to be here in 3 to 5 years, and I think it's going to do nothing but grow this entire time. I think it's going to be one of those companies that builds during the bear market and comes out better for it. So that being said, let's try to touch on where we're at with short term and where we're at with long term, high time frame, low time frame outlooks. So currently, what we've got is we had some support lines that we've started creating around the 1850 level. We actually fell underneath those today, and we're right now fighting to get back up on top of this and see if we can keep this as support. If not, we still have no bodies of any candles up in here. So if not, what we're looking at is this becomes resistance, and these wicks will probably end up with no real bodies, and we're coming back down to test this $18 depending on what the stock market does the rest of the week. Moving forward in a bigger picture, if you look left and you zoom out a little bit, you see that what happened is Affirm found a bottom even before at least this temporary bottom. It hit its low, I guess you want to say, its 52-week low. It hit its 52-week low way before everybody else did in the June and July situation. And what you ended up with was there was a different narrative. That's when they were already pushing the narrative about these pay-as-you-go places, that as the market gets bad and we have a recession coming, that most people aren't going to pay them back. They have bad business models, they have high overhead, and they're not making much profit. So you ended up with a bigger sell-off here than you had anywhere else in a lot of other stocks. Even when you come back and you look at the June low and the July low, they were not as low as it was with this narrative that the company wasn't good anymore, basically, or that all these companies doing this kind of pay as you go thing, we're looking at possibly not being able to make it out of the recession. So if you then zoom out a little bit more, we bring this in and we go to a higher time frame, jump this over to the 1 day and come, you see that this stock actually IPO'd and just instantly shot up to like $140, crashed down just below 100, shot back up to about 150, and then trailed its way down before finding a bottom in May of 21 around 44.75. Then from there, we went on, found a peak around $180. Since then, we've just been, crashing like the rest of the markets. I think that in my opinion, a reasonable outlook for this thing in the near term is that it's definitely going to come back and start testing in this, say, 25 to 30, $35 range. I mean, even this peak right here is up to $42 basically. So you're really in a cheap oversold kind of situation here where, in my opinion, I think it's a good buy personally. I mean, I've been continuing to load back up on it after selling at some of these other peaks. I was lucky enough to end up buying again when we crashed down here, sold somewhere up in here. Not too long ago, I was recently buying in June, sold again. And then I think I missed this July dip, but then here recently, I caught one of these dips and sold again, then just had been waiting to see where it was going to turn out. Recently, when it got back down below the 25 range, I started slowly creating a position. And as of now, at these prices, I'm aggressively DCAing and trying to, stay within whatever range it's in. If it drops down and starts trading in this 1650 to 1850 range, I'll try to accumulate enough to DCA into that range. And if I get lucky enough to get back down into here, I do the same here. Personally, I don't really see it breaking this low back here, just based on the fact that we found support much higher up, about $3 higher up on the June and July lows, which had the entire markets coming down with them. So if the entire markets sell off like crazy and we come down here and we try to grab this, or even we blast right through it, I think we have a secondary support that a lot of other stocks have not created yet as a base, because they have not seen such a aggressive sell-off from institutions and larger holders and earlier investors basically. So down here in this 1350 range, or $14 range, those are really good buys. And I'm not sure if we'll get back there, but I do believe with some more bad news in the overall markets, we can lose this line, break down into here, grab support, and trade in the 1650 to 1850 range until markets get better direction and we figure out what's actually going on here. If we drop down even lower, as I said, I personally be aggressively buying here. And if nothing else, looking for a short-term trade going into this holiday season and wait for that narrative. That's, kind of my outlook on it, as I explained. I was going to say something else, but I guess it's not really important at this point. I will bring up the fact that we have some gaps to fill up here, but in the near term, I don't really think that's as big of the outlook. We're obviously going to trade more closely, correlated with the stock market in general. And the S&P and the NASDAQ both have much closer resistance overhead that I think we'll be dealing with before we start looking into when are we filling these gaps. But in the further outlook, I would foresee us coming up here. I don't know, at least, even if this gets drawn out, we come down, come back up. I'd say somewhere between November, December, I see at least these gaps being filled. And, that gives you a good return on investment if we can get up there. Even if just we were to make it back up here to this, $27 range, $28 range, fill these first ones, and then these prior peaks back here start turning into resistance as this moves forward, you're still talking about this thing going from being like $18.50 to up around $30. That's some nice returns, especially just moving from now into the holidays. In the grander scheme of things, I see no reason why this stock should not go back to trading in the $48 to $60 range within the next 6 to 18 months. That's just me personally. They can continue to crash the markets, go into a huge recession and depression, and we'll see what happens. But I think that certain companies like this might end up catching their own narratives for a while, and there's no telling how long those narratives could last. It takes, a few months before a quarter goes by and we even get results, afterwards before they could even start looking for numbers that say, oh, look, people aren't making payments. I mean, at first, all I see going forward is not only are people using it more, and we could possibly even get a huge earnings beat coming up, in the near future, but then going into the holiday season and then reporting afterwards, I think companies like this are going to kill it. And I think that of all these buy now, pay later companies, that personally, I think Affirm's the best one so far. I mean, I've checked a lot of them out and try to make sure I did my due diligence as I started investing more aggressively in this company last year, and had some older guys, above me, Purdue graduates, guys who were top traders on Wall Street that, been doing this longer than I've been alive, without exaggeration. And, they were looking at it and telling me, oh, no, 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 that thing doesn't even, need to be at 48. It's not going to go to 55. You're not going to get the 60. And, then it went to 180. So, I don't know. It's always a gamble a little bit, but if you ask me, this is one of my more favorite companies that's come out in the last year, that I also think could end up having a huge holiday narrative. And I mean, that's mainly what you're looking for at this point. Is, I mean, I can't tell you what you're looking for. You can, be dollar cost averaging and just buying for the long haul. But anybody looking to trade right now in a shorter term is, pretty much looking for swing trades. And to me, this is a giant swing trade. So, do your own research, look into it. Not financial advice. This is all educational purposes only. But for me personally, I think Affirm has a good chance to make some nice returns for people going into this holiday season. And it's not one that I intend to miss out on. Should this thing turn around and crash and not go anywhere for a minute, me personally, I've got conviction in it. I'll continue to DCA my position and wait for the next narrative, and or wait for the next, recovery in the overall stock market, and just ride the wave up as it follows the rest of the stock market, even without having an individual narrative. All right, I think that's about it. We're going to sign that one off.